All right, gonna do a little quick recap of Friday and why sticking to the basics is, really goes a long way as opposed to trying to over calculate and you know figure out every single pinpoint move. I like ICT strategies. I like fair value gaps, order blocks, the whole nine liquidity. But at the end of the day, what a lot of people fail to realize and understand is that, trend lines, channels, the basics of trading really will take you much further than trying to calculate 10-point moves on a daily basis. Obviously, there's a gazillion ways to skin a cat, so there's not really no wrong way, right way, but I'm going to get down to the basics real quick. So this was going down, right? The night before, all night long. There was this gap that was created on the open at the previous session, Thursday's night session. I was expecting this gap to fill once this channel broke, and of course, as soon as all the lower highs started to get broken, which, on the way down, all these lower highs were created, right? Before the move, right? This just kept forming lower highs. This kept forming lower highs. This kept forming lower highs. And this is why I say the basics of trading, right? Because everybody, like I said, wants to talk about ICT and the kill zone and the Asian Open session and the London and Japan and Russia and Ukraine session. But what's more important is the basic concepts of you can't go long until a previous lower high is taken out, for the most part. You can try and attempt longs at key levels, I get it, but once this lower high was taken out, that's your first opportunity at a real trend change, right? And at the same time, you got this channel breaking, right? So you get a channel break and the lower high taken out. That's a double confirmation for me for a possible trend reversal, right? So once this lower high was taken out, the market is going to head to the most recent, price action, lower highs that were made on the way down. So boom, market opens. We start, not market opens, but the lower high takes out. We start ripping. We start ripping. We start ripping. We start ripping. Right. So as these levels are, once this level gets taken out, I'll take it out. 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 Right. I'll take it out. I'll take it out. I'll take it out. But as I'm taking out these levels, right? It still has this level to let's say, right? It's still got to take out this level. It's still got to take out this level, right? These are the levels that are still, yada yada. So after I take out those levels, I'm now putting these levels, okay? Because these are the most recent lower highs and the higher highs, higher lows, right? So here's another higher low. So now I'm constantly updating this chart. Because if and when this trend breaks, or when it did break, it's going to target the most recent higher lows on the way up, right? So boom, we got this formulation right here, right? Then it keeps pushing up from here. 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 And then finally, this gives way, and it starts to break down, right? After it, yada yada. So all I'm getting at is this, okay? Once I see this pullback and this higher low print, I will extend my trend line from here, right? From here to here, okay? And then just extend. That's it. There's no secret to this. Once this channel breaks, I'm expecting for a pullback to the Fibonacci zone. This was a fake out. It is what it is. But even if you did go short here, from 75 down to 35, this is a 20-point move. You could have got in here with some shorts, stop loss, break even, whatever. Long story short, the trend finally breaks. It fails to take out this level, does a liquidity grab because it just, inches right above and breaks down. And it comes right back to this area right here, okay? And this area right here is the 0.618 from this low to this high. Okay, so I'm going to erase everything real quick. So without knowing about trend lines, without knowing about anything, we do know that when a trend ends, it most likely comes back to the 0.618. So here's your 0.618 right here, okay? This is your 0.618 zone. And this is exactly where it came back to, right? And it also formed an inverse head and shoulders on the 5 minutes. So we got this, and then we got this, and then you get this break, and it goes to the moon, okay? So understanding, the channels, understanding that when this channel breaks, right, this is most likely going to go to the upside, right? And when this channel breaks right here, right, or even if you did something like this, right, when this breaks, it's most likely going to go to the downside, right? So you've got to learn how to start drawing your channels. You got to understand trends. You got to understand that when one trend ends, another forms, right? This trend broke out. This was a nice 40-point move to the upside, right? So where are your best, when you look at this chart, right? Where do you see where most of the moves happen, right? Most of the moves happen after trends break, right? This trend runs up, has a nice pullback, yada yada, right? This trend runs up, breaks down. This trend runs down, right? And even at this break, wasn't much, but 20 to 50, 30-point move to the upside from this area, right? Every single one of these trend line breaks, right? If you want to get technical, right? Every single one of these trend line breaks had a great risk to reward. Okay? Look at this. Look at this play out, okay? Look at that, right? This trend line break right here. Right? This is a winning trade, right? This short, after this breaks, and there will be fake outs, it is what it is, but guess what? This short, after this breaks, look at this. Look at this. Look at that play out, right? So for me, I'm looking for channels. I'm looking for Fibonacci pullbacks at the end of trends, and I'm looking to see what happens at those levels. The golden zone isn't a guarantee, reversal or a bounce area, but it's a guaranteed key level in intraday trading. It always is, Even look right here. After this trend breaks from this top to this bottom, right? Where does the market come right back to after this trend changes? It comes right back to the golden pocket. You got to know that when a trend ends, it's most likely going to head to that level. Majority of the time, boom, heads right back to here. So, if you trust the Fibonacci, you would definitely be taking along at least to the 0.5, And when you take this short, right? You take this short, you're expecting it to at least come back down to the 0.5, 0.618 area. It came right down there like a missile, right? Price delivered right to the 0.618. How? Via a channel, literally, okay? Literally, in a channel, right to the 0.618. Right to the 0.618, okay? After this trend broke, going up, where did the price action go to? Where did it go to? It went right to the 0.618. So you can't be sleeping on these levels. You can't. You cannot be sleeping on these levels. Right here. Another golden zone rejection, Price came right to the golden zone. After this trend break, price came right to the golden zone. So, if you don't believe in Fibonacci, what are you looking at on a day-to-day basis? What do you believe in? You know what I'm saying? It's like every day the market does the same thing over and over and over, just looking for liquidity, looking to screw people over, right? Look at this level right here. What happened here? The market broke the level and immediately got back in. That's a liquidity grab. Plus you have the channel break. So, you got to know all these type of things and be able to look at the market and make your decisions, with good risk to reward. It's really hard to lose in this business with proper risk management. But the reason why majority of people are failing is just because of pure levels of greed. I mean, very few of us, have no clue about the charts. We know what to do. We know what to look for, but you just get greedy. Greed overtakes, you want more. You don't know when to walk away, yada, yada. So just trying to give you guys a good heads up and, try to give you something to look for when the market opens and when the market is popping off, you know. I love trend breaks. I'm a big channel trader, you know. It's just over and over. It's all I'm looking for. One good trend break a day will pay all the bills. One of these a day if you do it right, right? One of these is payday, right? One of these is payday right here. Even if you took the short here or if you took the short right here. Hold on. Or if you took the short right here. It's payday, bro. Either way. These are 55 down to 37, all the way down to, you know, 46. It's a 100-point move, bro. Right? It's 100 points. This is 100 points from here to here, right? This is more than 100 points. This is 140 points from the high to the low. You know, so there's really no excuses. You got to understand these trends, and you got to understand what's going on here. Even this right here, right? You get this going up. Breaks down, tries to get back above, breaks down. You're looking for the reversal patterns, really, and just get yourself in a position where, you know, you make some good money. Even this, ready? Another Fibonacci 0.618 pullback. From this low to this high, what do you think this is right here? It's guaranteed the 0.618. Look, from the low to the high. It goes right to the 0.618 and continues. So when you're looking for a reversal pattern, when you're looking for it to the market to go up, right? You got an inverse head and shoulders right here, right? The market's going to go up, come back to the 0.618 area, and then push up. The better trade, to be honest, was waiting for a pullback to the 0.618. Not even attacking the long here, right? But waiting for the pullback. I don't like to wait for the pullbacks. I like to get in, and because sometimes it ain't pulling back, you know? And for the times it does pull back, I know where to put my stop. But look, it comes right back into the order block, slash 0.618, and it runs to the moon, okay? Over and over, I'm going to leave these examples. Look at this. 0.618, right? And from this high to this low, 0.618, right? From this low, right? From this low, right here, to this high, where did it come back to? Right? The 0.618, right? Like, who are you kidding right now? All right? Classic trend line break, retest, drop to the 0.618, rip face off, liquidity grab, drop. You know what I'm saying? Like, you gotta know this stuff. Otherwise, the trading is very difficult. But I studied this shit, so there's no excuses. Look at that. Straight up 0.618 drop, straight up recovery to the moon, right? Into another 0.618 drop right here, right? Then to the moon. So these levels are very relevant. Over and over and over, very relevant. And that's just how I try and calculate moves. You know, when a trend, when it starts ripping, I try and see where the fib is, where the expected pullback is, if it's a real uptrend. If this is really going to go up, right? If this is really going to go up, well, it's got to have a pullback, right? And that's where this is, like, how are you going to tell me, look at the candles at this area. Just get smaller, liquidity grab, runs to the moon, bro. It's incredible, dude. It really is. I love this stuff. So I'm going to do this quick little video. I'm going to post it up. Just trying to show you guys understanding trends and channels. You don't have to, you know, wait for Asian session, London session. It doesn't matter what session it is, you know. Everything is the same, bro. Any day of the week, okay? Right? Any day of the week. It's all about liquidity. It's all about higher highs, higher lows. From this high, from this low to this high. It comes right back to the 0.618. It holds. It continues up, right? It doesn't matter what day of the week it is. It's every day, okay? From this high to this low, it comes right back to the 0.618. Fails, it drops. You can't make this shit up, right? And then after you see this drop, you shouldn't be going long until a lower high is taken out. You should not be going long. You could have took it here, and that's fine. There was points here, right? But guess what? Where do you get out? When the trend ends, right? Or you could have got out right here. After you caught this nice 30-point move up, 60-point move, to be honest. You know, trend ends right here. Catch the reversal for what? What do you think this is right here, from this high to this low? What do you think this level is right here? 0.618. Not so weird. Really is so weird. Love it. Let me print this out real quick. That's it. I'm gonna end the video here.